Hello and welcome to Business Today TV's pre-budget series, where industry leaders and stakeholders from various sectors discuss pressing issues that should be addressed in the upcoming Union Budget 2024-25. Today we are discussing the key macroeconomic framework of the first full budget of the BJP-led NDA government. Joining us is Ramnath Krishnan, Managing Director and Group CEO of ICRA Limited, one of the country's leading investment information and credit rating agencies. Welcome to the show, Mr. Krishnan. So let me start off right at the outset with a macro picture in keeping with the topic of the discussion. Where do you think the two or three things, in your view, the budget needs to really focus on, given that rural distress is definitely a reality, consumption at the lower end of the pyramid is definitely a stress point, which has now become a point of discussion, and the creation of jobs. So two or three areas, I mean, I've said this, but what is your overall picture? How do you see the budget, and what do you think the finance minister should focus on?
Firstly, thank you for inviting me. It's a pleasure. I would expect the budget to be firstly fiscally prudent, because there is a guidance that the government has indicated in terms of where we need to get to in terms of fiscal deficit by the end of FY26. So the government will be quite focused, on that. Number two, high multiplier capex-led programs, will continue. That is essential. That has remained a focus over the last couple of years, and that will continue to be the case. Number three, as you rightly said, consumption has been lagging, particularly in certain segments, in the rural segment for that matter. And I think there will be programs that will be announced which will be focused on boosting, consumption. That again is essential. So I would say these are the three things that the government will probably be preoccupied with while articulating the budget, for the coming year.
Mr. Krishnan, just to focus on the numbers, if you look at the NSO's provisional figure for FY25, GDP numbers were much better at 8.2, and recently RBI has also revised the GDP for FY25 from 7% to 7.2%. Is there a case for a higher nominal GDP? Interim budget it was around 10.5. Is there a case maybe to increase it to, let's say, 11%, given the robust performance which we have seen in the economy?
In the coming year, you mean?
Yes,
in this
FY25. Yeah.
See, there are a couple of things that you have to bear in mind. Firstly, the first quarter of this year, generally speaking, the extent of activity has been actually quite muted, and understandably so, given the fact that we had elections to deal with and the code of conduct, being in place, and monsoons typically again, slow down, the activity to some extent. So therefore, the first half of this year is likely to be, first quarter certainly, and the first half certainly is likely to see relatively less activity this year, and therefore it will require a fairly significant step up in the second half of the financial year. My personal view is that, I think it will be probably unrealistic to actually increase the expectations in terms of GDP growth from, what has been stated by various people, including, ICRA.
Mr. Krishnan, when you talk about spending, also to boost the demand at the bottom of the pyramid, what exactly is, will the finance minister have to do to keep that fiscal balance intact? Because that's going to be key, right? I mean, that I don't think the government is in any frame of mind to move away from the fiscal consolidation roadmap. And that's a good thing. Everybody has been lauding that initiative. But how do you think, where will the money come from in that sense?
It's not going to be an easy task. It requires, fairly adept, handling and fine balancing. Whilst the government has stopped the practice of issuing, guidance or targets at annual res, there is a glide path that has been indicated in terms of where we need to get to by the end of FY26, which is 4.5% as a percentage of, GDP. And I think the government is pretty focused on delivering on that target. Going forward, obviously it will look to, lower it, even further. Now, if you see in the recent past, I mean, the government has been actually managing this, quite tactfully and carefully. If you look at even some of the spends that have happened, in the infrastructure space, be it roads or for that matter, railways and so on and so forth, the main investment entities, if you like, like your NHAI or IRFC, their borrowings have actually been kept under control. In fact, IRFC's borrowings have actually gone down and NHAI's borrowings have not gone up. And all the support has actually come from the respective, ministries, either Ministry of Railways or MORTH and so on and so forth. That is number one. Number two, the revenue collection, the tax collections have actually been in excess of what the government had actually anticipated. Some of the spends have been sort of pruned, including subsidies and so on. So I think to answer your question, the government will use multiple levers. I mean, they will stay focused on increasing the revenue collections, tax collections, and improving the efficiency of their entire, process, cutting down on some of the, subsidies and so on and so forth, and promote, economic activity, through PLI schemes and such other incentives. And we expect some element of tax rationalization to promote, spends. So I think it can't be just, one or two tools. I mean, it will be multiple levers that they will use, but it requires, fairly adept, handling. But the good thing is, I don't think we have an option, and I don't think the government has an option, but to stay, on course and to stay focused on this.
Mr. Krishnan, do you see any risk? I mean, what could derail the fiscal, consolidation path? Because if I see the fiscal deficit journey, I remember maybe 2007 or 8, we had 2.6 or around 3%. So, any risk you see?
See, well, the risks are always there, right? Regardless of what you do.
Global financial crisis that time pushed up the fiscal deficit. Then we saw COVID that also, in a way, pushed up to 9.1% of GDP.
See, though of course people believe that it is sort of par for the course and it's going to remain part of our lives. Your geopolitical crisis. This is something that we've been going through this for almost 3 years now. Who expected Russia-Ukraine crisis to persist this long, and it's still on. And then you've got, the Gaza crisis, at the present time. Something or the other, keeps surfacing. All this, has the, whilst we are probably in a much better shape as opposed to some of the other countries, we're not completely insulated. And it has, it can cause collateral damage. It does cause collateral damage for us, and because we are significant part of our import basket is actually crude. So rupee has a weakening, bias, and that pressure is something that we will have to be, watchful of. The other thing is inflation, and if the inflation doesn't actually, come under control, there is a possibility that RBI may not have much of an option in terms of lowering interest rates. So they may either keep it at the same level and hopefully not look at any increase. All this will actually reduce, essentially has the potential or the risk of actually reducing economic activity. Your cost of inputs actually could go up. Your margins could actually come down. The spends could therefore be lower, and the demand in those segments that are actually weak may not actually see an uptick. All this will have an impact of affecting even your revenue collections from a government standpoint. So if that happens, naturally, then it has a negative impact on your deficit as well. So risks are there, but I think these risks, I would imagine, are not dissimilar to business risks in general. Something that government as a responsible player will be mindful of, and they will take steps to manage it as efficiently as they can. But will there be headwinds? There could be.
Mr. Krishnan, let's come to capex, the other big elephant in the room in that sense. Last couple of years and more, the government, in fact, has shown the way by really pushing capex, government capex in a big way, trying to sort of kickstart the whole process, and the hope that private investment will come in, seeing this movement. However, to the extent we expected, there's hardly that kind of private investment coming in. In fact, that's become a cause for concern now. At the top end, some big groups have announced projects and all of that, but not at the extent we wanted to or the government expected. What do you think is holding back private investments? If everything is chugging along broadly smoothly, why are investor and private investments not coming in?
You're absolutely right. In private sector, capex has been a laggard for some years now, and broadly speaking, if you look at the composition of the capex, pie, about 2/3 to about 70% of the overall outlay is accounted for by private sector capex, and state-led capex is significantly lower proportion. State-led capex has been I think in pretty decent spot over the last couple of years, but private sector capex has been far from where they ought to be. Some reasons behind it. One, if you look at the aggregate capacity utilization, in the country at the present time, it's roughly around between 75 and 78%. This is an average across sectors. There could be sectors where it could be higher. There could be sectors where it's it might be a little lower. But ballpark, it's around 75 to 78%. So there is still some slack, if you like, generally speaking, in terms of existing capacity. So now businesses, they need to have clear visibility in terms of how the demand is actually going to pan out over the near term for them to be in a position to actually put money on the table. Obviously, last 1 year, private sector players have been sort of holding back a bit, also waiting for the elections to get out of the way. More from the point of view of for them to be convinced or confident, if you like, about the direction of the policies. So they need to be fairly clear about that before they actually commit themselves. Now that is out of the way now. There are a few companies who have actually come out and announced projects, auto sector and then steel, metals and so on and so forth. Has that yet translated into spends? The answer is no. We're hoping that it will. So second half of this year, hopefully we will see some kind of an uptick, but it's still some way to go. And also there are a couple of other macroeconomic challenges that we have. One, there are, because of some of the challenges that China is actually facing. So our domestic players in some segments are actually faced with competing against cheaper imports, which can land here not only from China, from some of the other countries as well. So that is one. Number two, there are certain sectors which are hugely dependent on export markets, textiles, cut and polished diamonds and so on and so forth. Those markets have actually been quite weak. So therefore, you're not likely to see significant spends in those segments, those sectors for some time now. So we're hoping that now that there is stability at the center, once the budget is out of the way, I think the private sector should get some visibility into what the direction might be in terms of policies and framework and so on and so forth. Hopefully that will give them confidence. And as I said, we need to see demand actually picking up, and it has been muted in some segments. So if the budget addresses that issue, and if the demand situation actually improves, I think that should also give private sectors more confidence in terms of committing themselves to capex.
Let's talk a bit, Mr. Krishnan, about disinvestment. Now that, from the way the government and the last couple of budgets has moved, I think this whole, thing about earlier years where government would fix a large disinvestment target and then, not be able to fulfill it and then come in for flack. I think they are moving away from that and looking at different ways of disinvestment in that sense. Now, after the Air India disinvestment, nothing really that big ticket has happened. While things are moving and there are some, disinvestments in the pipeline, that's one part. Then there is the asset monetization part of it. Do you think these two elements will significantly help boost government revenues in this year, or where do you think this whole disinvestment / asset monetization story stands?
Well, historically, I don't think, our record in either of these areas, has been, particularly, praiseworthy, if you like, and across years, across governments. And so we've not been, particularly successful at it. I think announcements are made, quite often, but our execution has been admittedly, quite poor. Personally, do I expect much to happen during this financial year? Probably not, because these things require a lot of planning, a fair bit of due diligence, and you need to invite bids and evaluate them, and then etc. etc. So, and the bidders will take a lot of time to do their due diligence and so on and so forth. So for the transactions to materialize or fructify, I think 7-8 months won't be sufficient. So unlikely that any of that will land during the course of this year. So budget will at least should give us some idea as to what government's plans are. So if at all it has to start and it has to materialize, I would expect the earliest will be in the following financial year, not in this financial year.
So do you think that the RBI, bonanza in terms of the dividend will in a way make up for the loss on the disinvestment side? I mean, the realization?
Probably may not make up, I would think, but it certainly will help because it's a fairly significant, payout. That together with overperformance, if you like, in terms of, tax collections and moderation of subsidy payouts and so on and so forth. All that has actually certainly been helpful, for the government. And I think certainly useful from a liquidity standpoint, but may not necessarily offset what may not have materialized, either through disinvestment or asset monetization.
And one of the things I was, looking at the, in terms of the valuation today, the PSUs, including the PSBs, are enjoying best of the best valuation today, So in the medium to long term, do you think there's a case that they should hold on to these assets, earn dividend, or have a path to disinvest?
See, there is a school of thought that governments actually shouldn't run businesses. And so if you were to subscribe to that school of thought, then essentially there is a strong case for you to disinvest, monetize, and let businesses be managed by people who are good at managing businesses. So from a valuation standpoint, my personal view, I think there is a threshold that every owner, if you like, needs to set for himself in terms of what will make sense from a valuation standpoint. If that threshold is met or crossed, my view is that then people should pursue disinvestment and then get out of that. So you can wait endlessly. There is no, people can say that, okay, if you are at X right now, it will actually go up to 8X in 3 years or 10X in 5 years, etc., etc. You can wait endlessly if you actually, pursue that route. But obviously, this disinvestment has to make sense. So for which, you need to have, set your own internal threshold. Now, that threshold is crossed, then I think the decision is to actually move out of that asset I think you need to take that call and then move on instead of waiting.
But Mr. Krishnan, studies have also shown recently that even if the government retains 51% in several PSUs, there's a lot of money to be made,
Yeah, absolutely.
given the markets where they
Absolutely.
are. So the problem is, if you keep waiting, like you said, you can never really time the market in that sense, right?
Absolutely.
So I think there's some movement needs to be made if you want to really tap that route.
Absolutely.
So I think that's the discussion which really the government needs to have. But you are not saying that you don't expect too much from this budget on disinvestment.
I'm hoping that there'll be direction. And they probably will announce as to what assets they are looking to actually get out of. But I don't expect much to happen from an execution standpoint in terms of in this financial year because of paucity of time.
And one question on the private capex, Saurabh. A few years back, we have seen consolidation in the telecom sector. So now we have 3 players there. Of late, we are seeing consolidation in the cement sector. Do you see this consolidation gaining momentum? Let's say 3 to 5 years down the line in other sectors.
Absolutely. I mean, I think particularly the larger industries, I think it will be cement, metals, and so telecom, and so on and so forth. See, these are all hugely capital intensive, right? So and you need deep pockets to sustain, to maintain margins, and to be a relevant player. So smaller regional players, etc., will actually struggle going forward, which is what you're beginning to see in cement, and which is what you've seen already in telecom. And you will continue to see this phenomenon, in the larger sectors particularly, and where you'll probably see fewer players of larger scale, of more national, scale, as opposed to smaller regional players.
Mr. Krishnan, the other point is, of course, there's so much discussion around the fact that this is a coalition government, and what impact the fact that it is a coalition government will have on this forthcoming budget. Now, there is the 2 states which we are talking about, which is Andhra Pradesh and Bihar, have asked for or are looking at packages or special packages for them in lieu of the support which they give. Now, what do you think? Do you think that will cast some kind of a shadow in terms of what the kind of leeway the finance minister will have, or do you think no, this is that they factored it in that sense?
It certainly won't be what it was. I think they had far more flexibility, far more latitude in terms of managing budgets, or for that matter, any of the policy changes, etc., etc. So here the process will have to be necessarily more accommodating, more collaborative. Naturally, as it is a coalition government, there will be demands, from the coalition partners. I think that's inevitable, and we've heard, from media reports that some demands have already been placed, on the table, and naturally, they've been placed keeping in mind the fact that budget is actually going to land, soon. So the government has to bake that in. So it won't be as easy as it was earlier. So it certainly.
But you don't see an impact on the fisc in that sense that they'll have to set aside that that kind of money for these demands.
Well, I mean, I don't think the fisc itself will get impacted because it'll get managed. But if this is to be accommodated, then something else actually has to be compromised.
So do you see?
So it is a balancing act.
So do you see some change in the composition of this capex 11 crore? I mean, some interest-free loan to states, these 2 states.
I don't know. I think it's difficult to tell. But naturally,
because they have to do everything within that number.
Yeah, absolutely. Yeah, absolutely. They have to manage that. But as I said, if this is to be accommodated, something else will be compromised. So it will be a trade-off. So all of it, cannot be done. So to that extent, could it impact the some of the growth sectors, some of the growth initiatives? It might. But I think that's inevitable position that we are in.
But overall, you don't expect it to be a populist budget, do you? In terms of keeping all these things in mind, keeping rural stress and all of that in mind, do you think there'll be populism keeping a little bit of leeway for in terms of the fiscal prudence, or you think no, that will be that itself is the deft balancing act which the FM will have to do, right? I mean, populism or prudence?
See, when you say populism, I think, see, what the government is likely to do is necessarily come out with initiatives to address muted rural demand.
Right.
Okay, so that
That's
has
not really populism.
Yeah,
That's,
exactly,
yeah,
right?
yeah.
So the other thing that the government could consider is to lower the tax slabs to, again, to propel, consumption. Again, not necessarily, populist, if you like, but it could be done to propel, or increase, consumption itself. So from that point of view, I mean, I don't think, like outside of this, like, if you're saying, are they going to come out with, food subsidies and, such schemes? Probably not. I would think.
Unlikely, yeah.
Unlikely.
That's been the way the government, this government has
yeah.
thought. And also, I think the continuity in that sense, which is there in the cabinet as well.
Sure.
This shows that the government wants to continue on that path,
Absolutely,
which it
yeah.
has so far
And
followed.
I think, I mean, in the interim budget, the overall, capex has been committed, for FY25 at about 11 trillion. So we don't know the components of it, but I think the components will get, articulated, fairly soon. So, but the broad number of the 11 trillion is unlikely to, change. I think they will stick to that number.
You think so?
I think so.
No upward bias?
Probably not, I would think. If there is, it might not be significant. And but I think the trajectory will remain largely the same. As you said, the portfolios have all largely remained intact. The key ministries have stayed with pretty much the same, people. So it will be infrastructure, focused. Of course, one of the things that the government will have to bear in mind is the climate risk, targets that we've set for ourselves, by 2030. So those spends will have to, kick in as well. So that will actually come into.
That's a significant piece as well.
So, but I think the overall trajectory will remain largely, unchanged, and the number we would expect it to be, pretty much around 11 trillion. What's been committed already.
The other thing, I mean, one cannot help but ask somebody like you, Mr. Krishnan, is you deal with, you know the innards of corporate India's health, right? I mean, that's what your business model is. Now, what is your broad sense of how well corporate India is positioned? I mean, when we talk of private investments, etc., whether now or a little later, whatever be the case, how do you think, how healthy, what is the health check, if I were to ask you, of corporate India at this point?
India Inc. in general, I mean, I think is in pretty good shape right now. Over the last, couple of years, this is across credit rating agencies, not just ICRA. We, track this ratio called credit ratio, which is basically ratio of, rating upgrades to downgrades. So that's been in the positive zone. Just pre-COVID or around COVID, it was actually in the negative zone where we had significant downgrades as compared to upgrades. So, post, COVID, or once as we were getting out of COVID, things started reversing, and we saw a significant number of upgrades. Of course, the pace at which, or that delta is actually reducing, but we are still in the positive zone. Our own outlook, ICRA's outlook on most sectors is actually stable, and we have very few sectors where we have a negative outlook at the present time. So, in short, I think India Inc. is in pretty good shape. And I think most corporates also, during COVID, post-COVID, we've taken away a lot of lessons. We focus on conservation of liquidity, preservation of capital, deleveraged a lot. So that's been the story, and that's been hugely helpful. And the banking system, the financial services system, between banks and NBFCs, they've been seeing, credit costs that have been largely, under control. So asset quality has been in pretty decent shape. So systemically, I think they are in pretty good space as well. So we have, stable outlook on NBFCs and banks as well. So I think in the in the medium term, I think we are in pretty good. We don't see any nasty surprises coming. One of the challenges, obviously, that banks particularly will have is on the liability front, deposits. I think they will struggle. They will continue to face that challenge for some time.
So overall, I mean, to sum it up, I mean, it's of course a balancing act for the finance minister. But the good news is that the fiscal deficit, the fiscal consolidation path may not be digressed from, and there's some money thanks to the RBI also coming in and better tax collections. Corporate India is in good health, as certified by one of the key rating agencies we have in this country. Thank you very much, Mr. Krishnan, for this wonderful conversation. Look forward to having you with us very soon again.
Thank you. It's been a pleasure.
Thank you.